Welcome back for another top-notch video. This week, guys, we'll be talking about the week of November 18th through November 22nd. As always, this channel is about TSP and Roth IRA stocks, retirement funds. If you are in the TSP, we talk about the C, S, I, and F fund. If you are in retirement accounts, 401k, Roth IRA, we talk about the ETFs, IVV, VXF, EFA, and AGG. As always, these follow the S&P 500, small caps, international markets, and bonds. That being said, we kind of go over a general overview of these funds, a little analysis, and then we go into a technical analysis. Please go ahead and like, subscribe the videos if you are interested in these types of things. So with that, we'll dig right into it. Obviously, with this week, we had a little bit of a down week. We did shift our funds just a little bit throughout the week. Did see just the funds down just a little bit, as you can see here. The C, S, and I fund were down a little bit, or IVV, VXF, and EFA, all down just a tad bit. Not very much for the most part, but they were still down just a little bit. As you can see, for the year, we are up quite a bit, significantly in these funds, with the C fund being the highest at 26%. On a chart scale, if you can look at it here, as you can see, the best performing fund we had for the week was the F fund, but not by much. We had the C, S, and I fund all down, but not by a whole lot. Overall, I wasn't too disappointed with it. We'll kind of go into a general analysis of each of these funds moving forward. I want to go over kind of what markets have been doing for the year. So as you can see here, this is November 20th, the S&P 500. I pulled this from CiovaccoCapital channel. You can go ahead and check out their YouTube channel if you're interested. This is November 20th for the S&P 500, or IVV, or the C fund. As you can see, the moving averages are in a very upward sloping movement here. There's not a lot of down movement. There was some consolidation here towards the beginning of last year, or towards the end of last year, right around this time in November and whatnot. But as you can see, markets continue to rise off the moving channels there, and it looks much more like the chart we saw in 1993, 1995, and in 83 to 85. And after 85 and 95, we had a very good period with stocks. So things are more looking in a much more bullish case than, I would say, a bearish case for our moving averages. As you can see, here's the next chart, where I have the same chart here, and then we have two bearish cases of 2007, 2008, which we all know was the financial crisis, and then 1999 to 2001, which was the dot-com bubble. As you can see here, we had some consolidation, and then charts and moving averages broke down. Consolidation, charts, and moving averages broke down, whereas we have some consolidation here again, and moving averages rise. So we don't have, I've heard some talks about recessions and stuff like that, but if you look at some of the evidence that we have in hand with our moving averages, it just doesn't paint that picture moving forward for stocks. So just keep that in mind as we continue on with our analysis. If you have questions, go ahead and write them in the comments below. So we're going to go over some of the commentary we get from TSP Talk. As always, you can check out their website. They do a good job at daily looking at some of our TSP funds, or the CS and I, or IVV, VXF. So some of the things I noticed from their charts was we have a couple open gaps for our IVV fund, or the C fund. We had a gap back here, down here by the moving averages, but for the most part, charts are up quite a ways. We're still in this trend channel here moving forward. We did have one small gap that was filled, but keep in mind that charts do tend to go back and fill gaps. Could possibly see that in the weeks moving forward, but we are above all our moving averages by quite a lot. In August, of course, we had testing that 200-day moving average quite a few times. Had it tested once in early October, and ever since then we've just kind of rocketed up since early October. But we still have some gaps in here. Wouldn't be surprised if we came back and tried to test that 50-day moving average, or maybe even come back a little lower than that to try and fill that gap. So just keep that in mind. With our PMO line is starting to get closer after this run we had here in October. For the S&P 500 on year-to-date chart, as you can see, and I'll show this later on through Grow My TSP as well, the chart is an upward sloping chart. So I know we've had a lot of volatility throughout the year and whatnot, and people always mention that, but it is an upward sloping chart ever since the beginning of 2000 2019, we had all this up and down movement in the May-June time frame, and then again in August, and then a little bit in October. A lot of financial news articles and whatnot coming out about stocks and whatnot, but overall, we've always just about hit that 200-day moving average, and it's an upward sloping 200-day moving average. We're between these two trend lines, and we're floating between the 50-day moving average. So it's not a bad place to be. Things are looking good for charts. Just keep continuing to contribute to those 401ks, TSPs plans, and you should just be all right. I don't see any massive problems moving forward. As for the S fund, we're hitting some resistance. So for VXF, we did see it hit the same resistance line in August. Curious to see if it can break that. We're in this trend line here. If we break this trend line, we're going to be in trouble. Could possibly see this come back down. Throughout the year, we did see the moving averages, or the price, move below the 200-day moving average in a much more worst case scenario than IVV or the C fund. But we did recover quite strongly from that, and now we're hitting some resistance here. Possibly could go down and test this 200-day moving average or the 50-day moving average moving forward. Just waiting to see what will happen with this trend line going forward. And then, of course, we have EFA. EFA has been an interesting chart all year. We haven't been able to really trade it. It's been a little too volatile for me with these moves above and below the 200-day moving average. They finally put some trend lines in here. I don't really like those trend lines that much from TSP Talk. I don't think they're that great right off the bat. We did have a large open gap here, and I would not be surprised with the trend line coming through here and with the price coming right around here to see that come back down and tap that trend line before it heads back up on its upward trend. And then finally we have bonds, or AGG, the F fund. With the F fund, we did see markets in a downward sloping trend. We did just recently break out of that, so that's something to keep in mind. We want to see if it can hold that, but we do have a number of open gaps here, and we don't even see the 200-day on this chart because it's so high. So AGG's been doing very well this year, but not as good as some of our other stock funds, but it hasn't been a bad place if you have a more conservative profile. And so we'll have to look at this also on a technical analysis. I want to take us through Grow TSP real quick. So these are more long-term charts, kind of give you guys a better idea. So this is the C fund, or the 3-year weekly average, IVV. So basically, as you can see, I didn't draw any trend lines in here, but these are we are making a series of higher lows and higher highs. And just recently, of this top trend line we drew, that Grow My TSP drew, we did have a breakout from that. So it'll be interesting to see if we can hold that moving forward. Their indicators, which are RSI, MACD, and just those two, RSI and MACD, as you can see, we are doing very well for MACD. That MACD line, the black above red, is doing very well. Our oscillator is moving higher, and our RSI is just about ready to hit back into the green. If you remember last time we were in the green, it was back in 2018, and we had a very good run from the September time frame when we hit that green. Again, green here, very good run up here, very good run up here. So if we could hit green here, we could see an explosion in price now that we are above that trend line. What once acted as resistance could now act as support for our C fund moving forward. And then we also have the C fund on a 1-year daily chart. Okay, so this just this has the same weight of evidence approach as TSP Talk, so they show the same thing. Upward sloping trend going here. As you can see, we are in between our trend lines, which are moving forward and moving up. They don't have the moving average on here, but it would be an upward sloping moving average as well. So they are noticing that we might be approaching some short-term resistance in the future. We'll have to see if that happens on this short-term chart. I wouldn't be surprised based off our technical analysis, which we'll move into next. As far as the S fund goes, or VXF, we did see a lot of consolidation here, guys, all the way for the entire year for that S fund. It is ever since we had that really big breakout in January, February time, not even February really, well, yeah, a little bit of February, we just have seen this thing go up and down constantly, which I think eventually we'll see a breakout. We did get very close to that 50-day moving average, breaking below the MA line, our 200-day moving average here, and we were very cautious, I know, moving into October with this resistance coming on. We did miss out a little bit on this rally because of that, but that line did hold, which was good, and we'll have to wait and see what happens with this. I think we can probably come down and touch this once again before moving forward. Our RSI for these indicators is about to turn green. So as you saw, the last time we turned green was towards the middle of February, which was a really good run. It was a little bit late in the rally, but that was good. As long as we're above that middle center line here, that above 50, we do tend to see a rally when that happens. So that's good. And then our MACD line is coming close here, so that's a little concerning. Like I said, maybe some short-term resistance just coming up in the future. As far as EFA goes, we did see some downward consolidation. Okay, so we'll have to see where this leads. We did have a massive breakout for October, just like all our TSP funds, and a lot of consolidation again. That blue line did hold, which is impressive. We'll have to see where that goes. I think we'll probably see it touch that blue line again before it takes off. We did see a little bit of green here in the beginning of November. Like I said, sometimes this is a little afterthought, so like I said, we could probably see this come back down just a tad for the rest of November. And our MACD, our black line, is below red, so keep that in mind with this fund. So I would probably stick away from EFA just for right now. It's been a really hard fund to kind of predict and judge. It's been a lot of fun trying to look at it throughout the year. Now we'll kind of move into our technical analysis. So we'll go through each of our stock funds and go from there. So the first thing we like to look at with a technical analysis is IYY. You might wonder why we look at this. This is the total market index fund. It looks at all the stocks put together so that we can get a very good general idea of the entire market. So with that, as I mentioned earlier, we did see a lot of consolidation, but this is an upward sloping trend, so that is really good to see that. See that 20-day moving average bounce up and down below that 50-day moving average right before the end of October and taking off, which is really good. This 200-day moving average was kind of flat for half the year, and then we really saw it start to move to that upward sloping trend in September and October. This is a very, very positive sign here. Our trend line is even above the 200-day moving average, so that's also a very positive sign. Might be a little extended here. As you can see, this we got this line here for resistance. We did break out of that, but we might be just a tad bit extended there. We'll look at it from the technical analysis on our charts. As always, we like to look at a long-term, mid-term, and short-term. So with IYY, on a long-term basis, as you can see, our oscillator is positive. Our PPO, which is that blue line, is above that red line, so that's another positive sign. Price is at the top of its Bollinger Bands here, so we are getting close to probably a consolidation period once again from consolidating these gains all the way from early October. So just keep that in mind. Long-term basis, it's still holding up very, very well. Oscillator's positive, no issues. Usually on a long-term basis, once we get about past 4 bars, 1, 2, 3, 4, 5, we like to be a little bit more cautious and try to conserve our gains, just a tad bit of what we've gained, because usually what follows after about 4 bars is a period of consolidation. So just keep that in mind. On a midterm basis, the 2-day charts, as you can see, we are starting to consolidate that gain just a tad bit. These are the faster charts, so usually what happens on the slower charts is whatever happens on the faster charts is usually what happens eventually on the slower charts, typically, eventually. With IYY, as you can see, our oscillator is starting to move back down. We had 2 weeks now, almost 3 weeks, where the oscillator went from 5.38 to 5.28 to 4.41 to 3.46. So that indicator is moving down quite a bit, even though price has not dropped just yet. That PPO line is starting to get close to the red line, has not crossed yet, so we're still in a good place here. But just forecasting it's just basically showing some signs of weakness for moving forward based off of what we have in the past. And then on a short-term basis for the 4-hour chart, as you can see, we are in the negative here for IYY. That blue line is below the red line. This is the shortest term chart. We'd really like to see this pick up or move back towards a positive oscillator before we start to invest back into some of our funds, especially some of our non-TSP funds, such as our individual stocks that we have, which are like Boeing, Facebook, or Chipotle. That's what we're in. So we're just kind of waiting on that, and we can move forward with that. That is IYY. Moving into some of the other funds, they're very similar. As you can see, IVV, or the C fund, looks almost identical to IYY. Not a lot of difference there. No concerns, no issues. We had the short-term bar drawn here on FinViz. Obviously really surpassed that in October, and we also had a second line drawn here from prior highs. Also surpassed that as well. So we are way above there. Just keep in mind what TSP Talk mentioned, which was those open gaps moving forward. But these lines are all very positive. As you can see, upward sloping trend line, upward sloping moving averages, the fastest moving averages on top. Good things here for IVV. And by the way, the fund is sitting up 26% for the year, which is pretty incredible. Looking at it from that technical analysis, as you can see from a long-term basis, we are in the same area. We have that blue line above the red line, or the PPO line above the moving average, which is good. Our oscillator is positive with positive moving forward. We went from 410 last week to 480, so things are well. Just keep in mind we are a little outside the Bollinger Bands here. When we tend to move outside Bollinger Bands, funds tend to just consolidate a little bit. Didn't really see that here, but just keep that in mind, that funds do tend to consolidate when they move out of the Bollinger Bands. It's just pretty much price trying to breathe or basically get some breath, and that breath is inside that Bollinger Band, so it's going to have to dip back in at some point. We'll wait and see what happens with that. That's a long-term basis. On a mid-term basis, IVV is starting to go down just like VXF, consolidating just a little bit after this massive price gain. So I'll have to see if this continues this downward slope. I'm hoping that we have a fake out here and the price will continue to rise, but in order to see that, we'll need to see it on a short-term basis. Short-term basis, we are seeing some positive things here. Blue line is below the red, but our oscillator is moving back towards the positive. So that's really interesting. That's the only chart we see this on. That's something we want to keep in mind if you want to basically capitalize on this little short downturn we had in the past week or so. So it might be a good time to maybe jump back into IVV if you had the chance, or if you were out of funds, this would be a good time to put maybe funds back into IVV or the C fund moving forward. As for VXF, or the S fund, as you can see, the trend lines are very much different than IVV. As this is more consolidated, more an upward sloping, better above the 200-day moving average, whereas the VXF, the S fund, has dropped below the 200-day moving average a number of times in October, which is always a scary thing for us technical traders. We don't like to see that, but it is held every time. And basically the line they drew was this one right here, which is very interesting, below that 200-day moving average. And the trend line is not all that far from this line again, so I would not be surprised to see this drop down. That would be a really significant drop, to see that drop all the way back down to these levels. I don't think we'll see that. I think it could maybe touch the 200-day moving average again, but just a little more risky fund compared to the C fund. I wouldn't exactly. We haven't even beat some of these highs yet. We're we have, but we're very, very close to the top of our August charts. So I'm just not as confident with VXF as I am with the C fund. So that this S fund needs to prove something to me before I'm willing to invest more into that fund for the time being. On a technical analysis for the VXF, as you can see from a long-term basis, our weekly charts, we are in the same kind of predicament as the C fund. Charts look very healthy on a long-term scale. PPO line is above that red line there. Oscillator is positive. On a mid-term basis, we are starting to see quite a fall here. Usually VXF being more volatile predicts what other markets will do, not necessarily, but this is something you want to keep in mind just for a short-term basis moving forward with VXF. And then on a short-term basis, as you can see, we are in the negative here with no positive oscillator like we see on the C fund. So we're going to be watching that, but just not somewhere to have funds at the time being. We're waiting just a little bit until we can see a positive oscillator on this guy. Moving into international markets, or EFA, or the I fund. The I fund has just been very volatile, as you can see. There's no clear chart pattern here. Just kind of all over the place, especially in June, July area. August we had a drop, and then we're starting to see more of a consolidation here slash trend moving forward. I would like to see more of a trend on this chart before I start to invest. Possibly could see it come down, hit this line here. Moving averages are in the right area. Finally starting to see this 200-day moving average start to slope up. Not above our trend line yet, so we'll have to wait and see where that goes. On a technical analysis for international markets on a long-term basis, IVV is we had our first down week here, so keep that in mind. That's something that we're not interested in. A lot of positive gain here. Would have been good to get in somewhere around the 6th or 13th of September. And now with these positive gains, it was great, but I don't think it's an entry point right now with markets. That oscillator starting to lose a little bit of speed. That PPO line, the blue line, is way above our red line or our moving average, but it's starting to bow out a little bit. And price, as you can see, had a couple dents in it here and there. So fun to watch for sure, but not to invest at this time from a long-term basis. On a mid-term basis, as you can see, we did do a cross here, so you want to stay away from that. Just for now, a lot of consolidation. As we get these gains, we might see just a little bit of a drop for EFA or the I fund moving forward. And on a 4-hour chart, we did see the oscillator pick up just a little bit, but with that 2-day dropping below, that PPO line dropping below the red line, we're gonna just watch it for now. We'll see. We'll see if this fund can come back. Again, a lot of consolidation even on a short-term basis chart. So we're waiting on EFA. And finally, let's look at bonds, AGG. So with AGG, had a fantastic run all the way from March to basically September. Fund has been up more this year than pretty much any year prior for the last 6-7 years. It is doing well, but it's not doing as well as our stock funds. Moving averages are all in the right area. Really good trend line. This is a really good fund to invest in. Why we were basically waiting, instead of investing in the G fund, why we were watching for market dips. It would have been good to invest in AGG. Then towards September, we saw some consolidation, consolidating all these gains here. Moving averages did move a little bit low here. We're seeing a little bit of a punch out now that we had this downward sloping trend, seeing if it can break out of that. If it does break out of that, we'll have to watch stocks and see how much stocks can gain. With stocks being so high for the year, respectively in the 20% range, you want to really pay attention to AGG and just be a little bit more conservative. So when AGG is doing well, maybe just not have as much in stocks moving forward. But these moving averages, a lot of space here, as you can see, between the 50-day and the 20-day and the 200-day. Our lines of resistance and support are drawn way above that 200-day moving average. So just have to wait and see what AGG does on a chart scale or chart perspective, technical analysis of AGG, long-term basis on our weekly charts. As you can see, we've been trying to move out of this for some time. We've had well, it's really from here, 1, 2, 3 weeks now where it's been that oscillator's trying to become more positive. PPO line on a weekly scale is below that. Like I said, a lot of consolidation, like I said on the other charts. Waiting for that to kind of see if we can pop out of that moving forward. If we do, be careful with those stock funds. Basically the 2-day chart of the midterm just basically popped positive. The last time we were positive was back in September, so that's been a long time. Something to keep in mind. As you can see, charts here are like a lot of consolidation on this midterm chart as well. Going to see if this trend can continue, and then always on a short-term basis, our chart is positive, but that oscillator is moving down. So we'd like to see all three of our short, mid, and long-term basis all on the same page. I'm not really seeing that right now. Want to see if we can break those trend lines, and if we do, we'll be more careful with our stock funds moving forward. That being said, let's go look at our charts and what we are doing in the Top Notch channel. With the Top Notch channel, we did have a move this past week where we moved into 100% G. We did that just because we didn't know what AGG was doing for the time basis. It did have a positive week, and it could continue to have a positive week, but we just want to be a little more conservative in this fourth quarter. We've had a lot of gain. We're up around 19% this year, which is fantastic. And we just want to watch our funds. As always with TSP, we're not trying to outperform markets. We're more trying to be just not lose our massive amount of gains that we've gained for the year. We want to have that managed portfolio of making money but not losing a lot of money. So what we want to just try and keep our gains of what we've got. So with that said, we are in the G fund this week. We could possibly see a move this next week into the C fund. Wouldn't be surprised. That's very possible. While we watch the S, I, and F fund try to get a more clear picture on what they want to do. Hopefully, the S and I fund follow the C fund, but I wouldn't be surprised if the C fund and the I fund follow what the S fund is doing. And then always, if the AGG or the F funds start to improve, could possibly start wanting to move a little bit of their funds more from the equity funds to bonds, just for the short-term basis moving forward. That being said, guys, I hope you enjoyed the video. Please like, comment, or subscribe. We always appreciate you guys watching. That's another top-notch video. We'll see you guys next time.